Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking cruise lines. Demand is robust, to say the least. I read some metrics like these boats are at 100, 102% capacity. I guess they're sticking people in closets or something on these boats, but it's pretty spectacular, the turnaround from the basically having to stall ships sailing during the pandemic, that it seems like everybody wants to be on a cruise and they keep building more ships.
Yeah, they keep building more ships, bigger ships, better ships, more attention for their ships. It's really quite remarkable what they're able to produce just purely from an engineering standpoint. I'm fascinated by what these companies can create. Overall, we see the cruise industry, Wall Street pretty much has it right. The ships are being booked at a rapid pace. I think that there's a really large amount of just pent up demand from that entire COVID, from the shutdowns all the way through, well beyond the kind of thaw there. It was one of those places, a cruise ship was one of those places that wasn't first on your list in terms of getting back to normal activity. There's still that lingering fear in people's minds of being, isolated on a boat during an outbreak and all that kind of thing. But that seems to have dissipated. We've got a really hot summer. The company came out and said, that their Black Friday deals were incredibly well received. They expect a very hot summer in terms of bookings, and it looks like we're getting that. And then, so really it comes down to which of these companies is best of breed. And I'll say, Carnival Cruise Line seems to be leading in terms of just overall consumer interest and demand. And that's really picked up over the last, month to 6 weeks. And so I think that if there is, any concern about the cruise industry overall, whether Wall Street's kind of gotten ahead of itself, it's probably least likely to be impacting Carnival, because we're really seeing Carnival, get a nice uptick here as we go into spring, as people start booking those fall cruises. And so I think that there's some good momentum in this entire industry, and Carnival Cruise Lines looks like the one that seems to be pulling away from the pack. It's a little early to say, completely pulling away, but when compared to peers, Carnival is holding its own really, really well.
Andy, when you look at the cruise lines, and you've got three real good comparisons on your data here. You've got Carnival, Royal Caribbean, Norwegian Cruise Line. Is it a price point thing? Do you ever break it down by price point, or does this data get broken down by price point? Because there's kind of a McDonald's Shake Shack relationship with some of these boats, right? Carnival is clearly the least expensive price point. And does that affect, or is that a factor in its popularity?
Yeah, I think it is, but at the same time, it gets a little bit confusing, because you think that because the Carnival Cruise Line brand itself is definitely, kind of the cheapest, but when you compare internally, the Carnival Cruise Line brands, the Holland America line, the Seabourn Cruise Line, those are the ones getting the most growth in terms of web visits. And Carnival Cruise Line is actually negative in terms of web visits on a year-over-year basis. And so we're actually seeing a little bit of a rotation within the company towards the higher end experience, which goes along with our overall thesis that we talk about with you guys on this show all the time, that the higher earner, the more wealthy demographic is doing pretty well in this economy, and it's the rest that are getting squeezed. And I think that shows through in Carnival's portfolio. And I think one thing that Wall Street tends to do, because we see Carnival Cruise Lines, that's the name of the company, that's the name of the stock, you see the boat, you see the cheap prices, and you think that's Carnival, but there is a lot more to the story. And I think that their upper end brands are starting to carry the weight pretty well.
Andy, when you talk about competition coming online, now you've got Ritz-Carlton's got a couple boats now. Four Seasons has a boat. Virgin Cruise Lines are out there. Is there enough in this pie to keep these, metrics that you have that are pretty positive across Carnival and the others for that matter, robust with, you've got the wealth effect going on right now with the stock market at or near all-time highs. Job market's still robust, so people have money coming in. Is that the big thing that investors, when they're looking at stocks like this, that, hey, those are the things that are going to matter? If the jobs market starts cracking, then maybe we'll see a slowdown in some of our data. But right now, it's just, free sailing basically for these stocks, right?
Yeah, it really is. They've got kind of everything working in their favor. Everything you just mentioned, I think, from a energy cost perspective, everything seems to be really in control, and so that could be another potential shift in the landscape in the future. But these companies tend to have really good visibility into their revenues 1, 2, even 3 quarters out. So I think as we go into this conference call, we would expect Carnival to have a pretty good idea of what's coming over the next couple of quarters and to be pretty optimistic about it. The only thing I think that everybody's starting to worry about, it's not just the cruise industry, but we start to see it just kind of trickling into these earnings calls. We start to see it trickling into LikeFolio data, is just these inflationary pressures. Some of this, it feels like there's a portion of the consumer base that feels really squeezed, really like it could crack. And so I think my best guess for this earnings call is that they come out and they say, look, we had a great quarter. We think we're going to have a great quarter next quarter. Beyond that, it's getting a little bit more difficult to tell, but we'll keep you updated. And so that's what I expect to hear from Carnival. We'll see if we get it.
Yeah, and last quarter, they did announce that best book position ever from price and occupancy standpoints. That was last quarter. If that continues, maybe good things. Real quick here, Andy, earnings score on this one going into the report?
Yeah, the stock's up too much this year for us to chase it here, but we like the name long term. And if they can throw a little cloudy forecast out there and get the stock to downtick a little bit tomorrow or the rest of the week, then we would be long-term buyers.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio. One of the key things when I look at Carnival or these cruise lines is debt that they had to take on during the pandemic. They're